All right, everyone, watch this entire thing. This is a very important thing. This is free money from the government because you had employees. This does not matter if you're quarterly or yearly. It doesn't matter if some employees aren't there for a few months. Also, if you started your company in 2020 or beyond, you can still qualify because this is a quarterly thing. Basically, this is money from the government because you had employees. It's not a loan. So watch this whole thing. Hey everyone, I'm Adam. Today we have Ken and Debbie on from the Tax Incentive Agency, and they can help us. I'm actually going to be going through with this, claim money from the IRS that we're entitled to because we had employees during certain times. How you doing, Ken and Deb?
Doing good.
Great.
Doing good. Thanks for having us
Thank
on
you.
here.
Thank you. All right, so straight off the bat, explain what this is.
So I'm Ken. I'm the owner of the company, Tax Incentive Agency. Debbie is one of the program managers for us. She works on national accounts, and we work a program that is very, very, I guess, time restraint. There is a time limit on it. There is a specific amount of money that's out there that was earmarked for this program. And it was all part of the CARES Act of 2020. And I'm sure everybody's heard of the PPP loan or EIDL. This was one of those same programs that was inside that package. But unfortunately, at that time, it was kind of suppressed because it was a program it's IRS based. So obviously, a lot of people don't want to deal with the IRS because they know that it's a long period of time for the qualifications and their file to get seen. So 95% probably went with the PPP loans because it was the most prevalent. Everything was being pushed. And at that time, it just kept burying the ERTC program because at that time, when it first came out in March of 2020, if you took a PPP loan, you didn't get the ERTC. And so all the, the spotlight went on the PPP loans. It was faster money. It was a larger amount of money. It was an easier process. They got their money faster. So that's why this program got buried, but is now really kind of resurrected because of all the revisions that happened. The IRS has now said anybody who took PPP loans can now receive this program. And it is probably the best program that we've ever seen on the tax side of the house. Debbie and I have both worked research and development loans, empowerment zone credits and incentives, SALT credits, solar and all that kind of stuff, cost segregation. This program by far is the best, hands down.
Okay, and what does the program do?
So the program itself, it helps business owners. You have to pay by W-2. It is a W-2 qualified program. And it was based on if you kept your employees working. So some people, they took their PPP loans and they paid wages. That was part of the process of the PPP. So as long as you kept your employees working, then you have qualifiable wages that we can now run your calculation for your entitlement, to claim your ERTC money. So it is a W-2 wage program. You have to have a minimum of 2 W-2 employees, not including your ownership. Any ownership of 50% or more doesn't qualify as a W-2 employee. And even if you're the owner's spouse works for the organization or the owner's children, they are not qualifiable W-2 employees either. So unfortunately, a lot of family businesses where, the majority of everybody is his family, they don't qualify. And it's unfortunate, but there's still a lot of qualifications out there.
Right. All right. So we're 3 minutes in, 4 minutes in, everyone's going to want to know the money side. How much can you get, or as percentage, or I don't even know what I'm asking, but like, what could people expect?
Okay, Deb, you want to take a little bit of this?
Yeah. So what's really amazing is that they take up to $26,000 per employee per year. So it's based on the wages. And back me up, Ken, if it's like, because they're taking like 70% of, what is it, $10,000? per quarter, correct?
Right. Yeah. So there's a maximum benefit of $26,000 per employee for a company owner. And that's maximum benefit. So there's breakdowns. In 2020, the maximum benefit per employee is $5,000 because the
Okay.
IRS says we're going to maximize the wages per employee at 10 grand. So even if you had employees that made $20, $30, $50,000 in 2020, the IRS still brings it down to the $10,000 mark. And then at that time, the IRS says you get 50% of that. So it's $5,000. So that's maximum. So you have other companies that may have, low paying employees, part-timers. Maybe they made, $5 grand, $7 grand in 2020. Things were slow. They still get 50% of that wage. So, but the maximum is $5,000 per employee for 2020. In 2021, there is a change. Now you qualify employees by quarter. So each quarter, if you have an employee that makes at least $10,000 or more, it's still brought back to the $10,000 maximum threshold, and you get 70% for that employee. So you can make up to $7,000 back on that employee. Or if they made under 10 grand, if they made, $5,000 for the quarter, then you're going to get a $3,500 benefit from just that employee. And then you go into Q2 and Q3. So the money really is in 2021 because you're tripling your money, plus it's a higher percentage too. So those businesses that could qualify for 2021, all 3 quarters, that's where they see the definite money come in.
Okay. Yeah. So a lot of people watching this particular channel were seasonal. So it's doesn't matter because it's by the quarter.
Exactly.
Okay, cool. Oh, so I was reading up on it a little bit beforehand. If I try to do this on my own and mess it up, that's not good, right?
No.
Oh,
not
yeah.
At all.
No, you don't want to. Yeah.
Okay, so
yeah, this program. So this program is underwritten like in the incentives, credits, and rebates division of the IRS. It's not like a tax program like your personal taxes, and with that, this isn't like really reviewed and corrected. Like when you send in your taxes, if you overpaid or if you file a tax report and the IRS goes through that and they revise it for you and say, well, this is what you messed up on. This is in your revision. This is what you're getting now, or we're giving you this much more. That doesn't really happen in this program. This is pretty much a very fast look. They make sure that there's the correct entries in the correct boxes. It's an amendment to the 941s, which are the quarterly reports. And they're just looking for somebody that signed off on it. They're looking to make sure that the numbers are correct. They're going to take a look at the industries. There are certain things, there's 2 ways to qualify. There's based off of revenue drops or losses. And there's COVID mandates that are in place. When the program first released, they took 2019, so 2019 as your baseline revenue. Let's say you made $100,000 in 2019 in gross receipts. You had to lose 50% of that in 2020 in order to qualify for the claim. And in 2021, you can lose 20% in a quarter and qualify for those quarters. Okay. There's also another revision that if you lose 20% in, let's just say Q1 of 2021, but your revenue goes up in Q2, you still qualify for Q2. It's just this kind of quirky little revision that they had, which is good. It's a bonus for companies. But
now, was that for like mandated companies with COVID?
No, it was just, anybody that had the W-2 employees, everybody falls under the same things. But mandates, when it comes to COVID mandates, it's, shutdowns. It's like tons of restaurants, retail, any companies who deal with customers on a daily basis. Obviously, there was social distancing, limited capacities. Restaurants had limited seatings. Everybody went through that. You went to go try to eat at a restaurant and like, sorry, we're full. We're at 30%. There's lines outside, and then everybody says, see you later. I'm going to go find another spot.
Right.
Those are impacts. Yeah. Those businesses were turning away customers because customers didn't want to wait. Okay. Now, still, restaurants made a lot of money. There's a lot of them. We've had customers. Debbie's had customers. I've had customers where they've actually doubled and tripled their income, their revenue. They doubled and tripled their revenue. So people would say, well, they didn't have a 50% drop in revenue, and they didn't have a 20% drop in 2021. So how do they qualify for the money? And the reason why they qualify is because of the COVID mandates that were in place, because they had a portion of their business that was hindered by the mandates that the state or the federal departments put in place, limited seating, limited capacity, and therefore their business was hindered. Now they just figured a way around it. They created outdoor dining spaces in parking lots, sidewalks, all the stalls that you parked into, they brought your food out to you. They still made money, but the fact is their establishment was hindered. They could not put people in there. And so because of that, they qualify for the program. So it's a great product.
Mm-hmm.
All right. So channel specific here. This is a party rental kind of thing.
Right. Which is huge. Yeah.
Yes. So actually most of us made more money during the pandemic because of setting up tents at restaurants, outdoor events and stuff. So like, how's that going to impact us, the people watching in the party rental business? We made more money.
Right. So in the party rental business, what happens is you're bringing products because people want the tents outside, like you said, the restaurant establishments and so forth like that. However, what else was impacted on your side of the house that you could not do?
Okay, indoor weddings.
Mm-hmm.
Exactly.
Just
lot
of stuff.
Right, and not even that.
Other venues,
it goes beyond that too. It goes into expos. Shows, conventions that you would normally do like in your local city or area to show your products and services so that you can gain more business. So those expos were not happening in 2020, and some in 2021 still didn't happen. So if those expos that you attend to gain you business on an annual basis and you couldn't do that, that was a hindrance in you making more money.
Just want to make sure for the people watching, I don't want anyone to be like, well, we made more money and turn off.
Yeah, no, we did an actual deal that you brought that up. We did a deal in San Diego for a party rental company, and I was trying to look it up here while you were saying that because it spurred my memory. They got back $51,779 for a party rental company in San Diego. Yeah.
All right. So what does everyone need when they come to you? We talked about it beforehand, but just run through them real quick. 941s, things like that.
Go for it, Debbie.
Okay. So we're looking for the 941s from 2020 and 2021 from the Q1, 2, and 3 for 2021 for the established businesses. And then we're also looking for gross receipts from 2019, 2020, and 2021. And then, which can be, something off of QuickBooks or something. It doesn't have to be like crazy, huge profit and loss statement. But if people do have an accountant that helps them with that, we've been working with accountants on that. And then we're also looking for any insurance that you've paid out to your employees. And then also the quarterly payroll reports that are put on the report by employee. And if people have questions about that, I actually now have screenshots so that people are, perfectly understanding about what needs to happen, because some people will send us like just crazy tax forms and things like that, and W-2 forms, which don't meet the qualifications. So, and then there's also a state payroll tax. If you can't get your payroll reports from your payroll company, you can also get it's an unemployment wages report from your state tax government website that will show a breakdown of the wages per employee.
Right. So this stuff is all actually pretty easy if you have a payroll company.
Yeah, really simple. Yeah. And we send the instructions once we've had the discovery call with the owner or their CFO or whoever is helping to get all the documents together. So yeah, but it's pretty simple.
Okay, cool. All right, so now everyone's also wondering, how much does this cost?
So we have the process, like Debbie hit on that real quick, and I was going to hit on that real fast, Adam. So our process is we do discovery calls. So we want to, even though it's a party rental industry, let's just say, we're rolling with the party rental industry, we still need to have conversations with every owner because every owner is in a different location. Every location's had different mandates that were in place. If you're in Chicago, if you're in Portland, if you're in city of Los Angeles, where it's just dense population, the mandates were hardcore all the way through 2021. We can qualify you on the mandates, because like you said, Adam, if your businesses really didn't lose money because you were out there, you had tents at all these locations, so you guys were making money. You were losing on the other types of revenue that you did, like you said, like weddings and all the other kind of good stuff. But those are the conversations that we need to have with every owner. So we always do what's called a discovery call. That's the first thing that happens. Once we do the discovery call, it's only about 5 or 10 minutes. We're just asking questions like, hey, what kind of company do you have? How many W-2 employees do you have, excluding the owner, the ownership spouse, and kids? Did you have any revenue drops or increases during the time frame? Did you take any PPP loans? And established, because one of the other things that I don't know if we touched on it really quick, Debbie had touched on the documents that we need for the years, but there's also the startup side of the house. So there's two programs. There's a startup phase and there's an established phase. Established companies are any company that was started 14 February 2020 and back. And then those are the established. The startup companies are 15 February 2020 forward. 15 February 2020 forward as a startup, you're only going to qualify for 2021 Q3 and Q4. So there's only 2 quarters that you can actually get money off of. So, and the main question for startups is, do you have that W-2 status, more than 2 or more employees? And also, did you make $1 million or more? If you didn't make $1 million, then you automatically qualify for those 2 quarters. There's no need for revenue drops or increases or anything. It's just purely based off of how much did you make. So that's a difference. So you're only going to send us, Q3, Q4, 941s, employee reports, and then your annual profit and loss statement, your annual gross revenue number versus the quarterlies on the established side. So just wanted to clarify that. Our fees, once we go through the discovery call, we'll let you know what that you qualify, obviously, through mandates or drops in revenue. We send you an email at that time that breaks down the documentation that you need to send us. Again, nobody needs to really write it down. We'll send you an email. But we also talk on the phone before we get off that once we get those documents, we run all the calculations. Typically takes us about a day or 2 to run the calculations, come back to you. I would say, hey, Adam, this is Ken, Tax Incentive Agency. Just want to let you know, we finished up your calculations. Your summary analysis for this program is, 50 grand. Okay. So 50 grand, you say, hey, let's go forward, man. Let me get my money. At that point, I'm going to tell you, we're going to send you out another email. It's going to be a Panda doc. It's going to be our client agreement. And that client agreement is going to show all the terms and conditions. One of those terms and conditions is we do have a $300 submission fee. That's for the work that we've already done, doing all the calculations, inputs, building your file, industry research. Plus, we're going to certify that file. We're going to pay the expenses to overnight it to the IRS. We put tracking on it. And then our processors in-house track it while it's at the IRS. We want to see if it's still in the queue, if it's being worked, or if it's already been, worked and funded. So that's a $300 fee. Our main source of income is our contingency fee. We charge a 15% contingency fee. So that contingency fee is paid to us after you have received your money. So if we're telling you that we're going to file for a $50,000 claim, when you get your $50,000, whether it's going to be broken up into 2020 and 2021 Treasury checks, because this is a This is a treasury check program. They send you actual treasury checks. Once you get your money, we'll send you a 30-day to pay invoice for the 15%. So you're keeping your 85, you're paying us our 15, either by check to the corporate office or by wire transfer. You deduct the amount of money, the wire fees, deduct it from yours, and we're good. And that's pretty much how simple and how seamless the program really is.
Okay. In case people don't get it, this is not a loan. This is money
Right.
given to you. You don't have to pay this back.
Correct. Yeah. So this is non-taxable. This is a non-taxable program. So the money that you get, you're not paying taxes on. Now you're going to apply it towards your wages. So let's say you do a file this month, and you get and this is the other part. This is the worst part. Here's the worst part of the entire program. You're waiting for the IRS to get to your file to get you your money. That's the worst part.
Yeah, that's the worst part.
Yeah. In 2020, it was like a 2-month process. 2021, it was like a 3 to 4 month process. Now it's a 4 to 6 month wait for the IRS to get to your file. It's terrible. But the IRS, like everybody else, they're undermanned, 20 to 25% undermanned right now.
Right.
So that's the worst part. But it is it's a long wait process.
Right. Now, when you do your calculations and whatnot, how often is it the same or very close to what they end up paying?
It's pretty close because the IRS actually is pretty fair about this program. They don't really do revisions on this file when we send it in. They don't have time for it. They're so undermanned. 2, with our files, they're being certified by an enrolled agent. So there's a CPA, and then there's enrolled agents that are above CPAs. We have an enrolled agent that is the certifier of our entire program. So Tyler is the one that certifies everything. When they look through the files, they see that it's done by, an enrolled agent or, certified CPA. It's kind of a no-brainer for them just to make sure that the boxes are filled in, approve it, let's send out the checks. If it's just sent by an owner or a general accountant, it's a little bit more scrutinous. They want to make sure that everything's done correctly. They're not going to give you extra money. They're not going to say, well, wow, this company should have qualified for COVID mandates. I don't know why they didn't take it, so let's give them more money. They don't have time to go through that process. So it's just either approved or denied. Okay. And if it's denied, it's not like typical taxes where they're going to send you your taxes back and say, hey, you need to fix this.
Right.
This is just a denial, and you don't hear from them. It's dead file.
Okay.
So if you get it back, let's say you happen to get a nice processor and you get it sent back, there's no notes that say, hey, this is what you need to do to correct it. It's just, it was. So if you didn't know how to do it to begin with, how are you going to know what to fix?
Right. All right. So where can everyone go to start this process?
So Debbie is actually a national manager. They can email Debbie. Debbie at taxincentiveagency.com is the great way to start. Debbie deals with me, usually on any overflow. So if she's inundated by a lot of stuff, she'll kick it over to me to help some of her clients. But most of the time, if you just send a response to Debbie at taxincentiveagency.com saying, hey, Debbie, saw you on the podcast, or, I want to refer a friend or another family member that has a business. She'll respond right back. She's pretty quick about things. She's very active, obviously, with a lot of clients, but usually within 24 hours, she'll respond back to you. At least the response is going to be an email that says, hey, thank you for contacting me. You probably saw a little bit about the program. So I'm just going to give you the documentation to start to get a little handle on ahead of time. But we still do need to have a conversation of what's the best phone number to give you a call back on, maybe a time and date. Debbie's calendar, maybe, you can book a call.
We have calendars.
Yeah,
sure.
You can book a call, or, just say, hey, I'm available all day on this number. And that's the best way to start it out.
Okay, great. I'm putting those links in the description, everyone who's watching, so just go there.
Yeah, I have the claimyourERTC.com as well.
Okay.
So they can get more information on the website.
Awesome. Party rental companies, we know that they're going to qualify. We've already done them, Adam.
Oh, yeah. That's great. Because where are you located?
New York.
Okay.
Oh, New York. Okay, great.
Yeah. So
Yeah, we're doing
Yeah.
a lot of business in New York.
yeah.
Adam, quick question for you. So when the party rental business, is there time frames? I know a lot of people, you typically have all your information or your products and services already. How often do party rental companies have an issue getting more products? Like, did you see any of that happen?
Oh yeah. You can't buy things.
Right.
So
So that, and then in those are other instances also. Those are COVID qualifications, because there's direct and indirect COVID mandates. And
Okay.
the direct COVID mandate is you can't go and set up because your people are around other people. Okay.
Yeah.
The indirect is the locations where you would normally set up are saying, hey, we can't have your company come in. We're postponing everything.
Right.
And then the indirect on top of that is if you're trying to get, new sets of chairs, more tents, or whatever the case is, and those manufacturers are shut down and not producing it, that is an indirect COVID mandate. And, if you have any kind, even if it's shipping, like you ordered something and normally the shipping is going to be, 7 to 10 days. And now they're saying, hey, we got your stuff on order, but it's going to be 3 to 4 months before you get it. That is an indirect COVID mandate authorization as well. Right. So there's a lot of little variances, but I wanted to ask the question on what you guys ran into.
Yeah.
Basically, because of all these restaurant and COVID test tents, you called up a company and they're like,
oh, right.
We can't get you anything for 6 months.
Right.
Oh.
Because of the high demand, also because they were waiting for product. One specific one for me was I was able to get the frame for the tent, but they didn't have any vinyl to make it. So I got the actual vinyl part months later.
Okay.
Okay.
Wow.
So yeah, I should be good.
Yeah. All good information. And those are the bullet points that need to go out to your industry. Make sure that you have these bullet points in there, because those are the things that we would keep in our files. This is not the IRS can audit this program just like it's doing for the PPP loans. For the PPP loans, obviously the big thing is the Secret Service has stepped in to do the auditing for the IRS because the IRS is so undermanned. But they're only looking at deals where the people actually took like $500,000 to $1 million, and they went out and they purchased boats, or they started new companies with that money. They didn't apply the money towards the wages.
Right.
So it's like a fraudulent investigation on that part. But with this money, this doesn't have to do with that. This money is not earmarked like the PPP loan is. So they don't care where you spend the money. You go buy a boat, whatever you want to do. But with this program, it's really all about the mandates. And that's why we need to have that information there. Because if the IRS does happen to just round robin and pick out a couple of people to audit, and they say, well, we see that you had high revenue. You didn't really have the drops in revenue. How did you get the money? First of all, Tyler, who does the certification for us, because he's doing that, if any customer ever gets an audit email or an audit letter, make a copy of it, forward over to us so that Tyler can have it. Tyler's going to make the phone call to the IRS and say, what do you guys need? Right. So he's your spokesperson immediately. And what happens is he's going to shoot through your file and be like, okay, here's the reasons why they qualify. And he's a government appointed, enrolled agent. So he's appointed by the government to actually fight against the IRS in these types of instances. So he's just going to say, yeah, it's a rental company. Sure. COVID test tents everywhere. Every rental company made money because these were the tents that they used. But in order for them to have more product for other events, they couldn't get it because it wasn't being manufactured. It was long shipping time frames. The events were being pushed out, so they lost money on that side of the house. And now he explains it to the IRS person. The IRS person goes, okay, we get it. Right. Done deal. Thanks a lot. Closed. And then they go their separate ways. So these little tidbits of information is what every owner should keep in, on a Word doc or something. The reasons why they're qualifying without the revenue drop are these reasons. Right. And that's what we keep as well. So, just to let you know.
Okay, awesome. Everyone, do it. I'm going to start this with Debbie. Debbie, I'm going to start Monday because my weekend's so busy. But
Oh, great. Wonderful. Yeah. Well, and just also to note is that both Ken and I have been entrepreneurs ourselves. So we're very sensitive to the fact that we know people are in different situations right now. And
Right.
we just really want to help as many people as we can because we both have been there and we know what it takes to run a business.
Right.
right. Awesome. Well, thank you guys for coming on today.
No worries.
Thank you
Thanks,
for
Adam.
having us.
All
Yes.
right. Have a good one.
All
care.
right. Thank you. Bye-bye.